All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for August 2023. So, just had the medical update, just had the consultation at KU Med. Doc said I'm extremely fit, except for that valve that needs to be replaced, which was severely constricted. There was, all the numbers look good. There was no reason to hesitate or prep needed. And they had an opening on Monday. So we'll do the pre-op on Friday, surgery on Monday. A week in the hospital in the ICU, then probably 6 to 8 weeks of recovery at home. My brother and son will do a expedited or reduced set daily report while I'm laid up. I may persuade him to do a nightly podcast, but we'll see. So about a week laid up, all things, being equal, God willing, and the river don't rise, then that's our plan going forward. All right, so let's start with the hybrid swing portfolio on 30-minute charts, beginning as always with Alcoa. One thing I want you to notice is the oscillations from trading range to trading range. In this case, marked off by the 5-day lows and whatnot, and the shots that we're taking, it's running and then starts to stall, so we exit. If I hadn't been sick, it's running, it starts to stall, we exit. It just ran, it was at a boundary, it reverses, it's running and starts to stall, we exit. Big gap down, starts running, starts to stall, we exit. This is very much like being in a helicopter and you got a herd of wild pigs down here that are running hither and yon, and all you're doing is noticing the natural boundaries of the terrain that they're encountering, and they're making turns at places where you would expect them to make turns. And you're taking the easy shot at the turning point with the measured risk, a little bit of safety, a little bit of risk on this side, and room to run on that side. And when it starts moving that way, you take the shot and you quickly get your risk out. So that's very much what this is like. So today, the market continued to respond, I guess, to the Fitch downgrade. I also think it was a natural time to have what has been an exceptional July for people who are getting nervous to book profits. So there's this double turning point up in here. So here's the gap. That was the gap down all the way to here. Standard risk, take the shot, exit at the edge of the dragon for +1. And again, I will take that trade 100% of the time and be just as happy as I can be. Now, this is the one I want to talk about. Yesterday, if you were here, I talked about at length how we got into this trade with the COTA 2 or SSC, how we then, after a support and a COTA 2 and an emerging dragon, got 2 positions into it yesterday, and why I exited at the stall right here. If you didn't hear that, or you didn't hear all of it, you should go listen to it again. If you listen to it, you should go listen to it again. Basically, I'm saying go listen to it again. So what it did was gap down and then instantly start selling off. That was the least surprising thing of all. And then the sell-off was to here. Now, I want you to notice that there is a doji down here at precisely the level where you would expect to see a doji. And so there was actually, from that little doji at the measured low, There was actually an intraday trade available from 38.75 with about a 50-cent risk, which is the size of the standard risk. And at one point, that thing was up 1.5R just on a ordinary retracement. So it's not surprising when support levels act like support levels. So that was AI. So this was, we saw yesterday a 9R trade that we cashed here. And if we believed in that trade, say, well, how much farther can it go? Oh, that far. Well, I might as well hold it now. It would have come all the way back to where the entry was and then some, and we could have allowed a 9R trade to go negative. And then if we had sold at the bottom, typically, then we have regrets already. So, you know, the title of that recital is really, and there's a short video on this already on the YouTube channel, but a lot of this is just knowing or feeling, knowing when enough is enough. The SSC entry was a 6R trade. There's your standard normal risk based on statistics. It had already had a 5-day move. The COTA 2 entry was a 2R. The 2R battle drill entry was 1R, and that felt like enough. And then that was the gap that erased all of that play. And then the sharp move, which didn't even take, was, if you're alert, you say, well, could I just put a risk box on that and play that one short for 1, 2, 3, 4R, and it is holding steady exactly where you would expect? Yes, you could have. And notice at the time that I did this chart, it had terminated in a perfect doji. Look at the importance of that doji. Tiny little thing that it is. It climbed the wall of worry, made an extraordinary 9R move. Harshly collapsed down to here. The difference in emotion between all of this greed and all of that fear, the shift from one side of the pendulum to the other is enormous. But now, look at the difference between the emotion of fear that is expressed in this move, and it terminates for 30 minutes in the tiniest little doji you could ever want. That is the absence of fear. It's the pause between fear and greed. And that's what we mean by max pain range compression. The change in psychology from maximum fear to one of indifference and indecision is an enormous psychological shift. The opposite of fear is not greed. The opposite is indifference, and that is a sign of indifference. And when the preceding move was heavily down or heavily up, the doji represents a very important turning point in the psychology of the previous move. The larger the previous move, the more significant the size, the signal that's implied by the doji. So that is the essence of max pain range compression. And if you're framing this trade and you say, hey, I want to put a risk box on it, you've really got a target of the top of the dragon of 1, 2, 3, 4, 5, 6R available. Now we saw that it ended up getting to about here, a third of the way up the stack, but still the point is made. So I wanted to just highlight that for the importance of last night's discussion of why, because I got some emails. Why did you get out of that trade? Because enough. My bowl is only so big, and how much can I even carry? I would just rather just take it home, stack bricks on a pallet, you know, and then have that pallet ready to move, and then go stack that pallet with all the other pallets over in the warehouse and have no overnight risk. Just put it in the barn, stack it on the pallet, move the pallet to the barn, protect the barn, make the barn out of fireproof material. There's plenty of time to go back out into the world to go harvest some more things. You know, enough is enough. And yeah, as the Eugene points out, I know how to re-enter. You know, if this thing had not done this but started going up here and took out above that, I know how to get long here. I know how to get short there. You know, be grateful and get to closure. That's why you don't really see me taking that many overnight risks. Let's see. Caterpillar. So here's one where yesterday we got the gap and go, second position, closed here, and it did this. And then today it ran up and ran down. So quite a different follow through on Caterpillar compared to AI. AI had the big drop, as we just saw. Caterpillar had a little more follow through. So yeah, so did we leave a little bit on the table? Sure. Doesn't matter. This was the correct exit for me yesterday, in the same reason that AI was the correct exit for me yesterday. It's something that I've reconciled with myself, not because it's, you know, objectively best. What does that even mean? How could we even agree on that? It is personally and subjectively and measurably good for me. Oh boy, I can feel that one in my chest. Cliff. Gap down. Oh, wow. Risk box sell off. Took the short. Took the dragon exit. Oh, gosh. +3. Here's one that got away. So CVS, you know, yesterday you had the short. It was closing poorly. It gapped all the way down to here, sold off more, and then I finally had the presence of mind to exit here in order to capture 4 and gave back 3. And much to my surprise, missed about a 12-hour move to there, and then a sell-off. So this was really the anomaly compared to the broad market sell-off today. CVS, something is going on there, and that may be in play again tomorrow, with a lot of people trying to preserve this, or maybe, you know, if the market doesn't continue its sell-off, CVS is in a prime position. Dish, no trade, although the short was there. Every single one of these, you know, short positions were available. I didn't maximize the number. I just tried to pick the ones that felt like they were moving the most, or observably moving the most. Like Devon Energy was an easy one for me, because it had broken down below the RL10, which is also the baseline of that sell. So gapped down through that and started selling off immediately. Harsh move, find support, drag and exit like a little fish hook. +4. Electronic Arts, an even bigger gap, and about a 3R, and again a drag and exit. So this is, and then out at the dragon. You know, the maximum favorable excursion was down here, so it gave back about half. I had some hopes, but it sort of timed out right here. It ended up breaking down further, but I was not tempted to chase. I was getting ready for the consultation at that point anyway. Emerging markets, another, again, we talked about this one before, the gappy nature of EEM, the size of those gaps. I had plenty of other things to do, although that was certainly tradable. And then the dragon exit. You could almost look at that dragon as an accelerated PSAR in some sense. It has some of that quality to it. ETHE was a gift. This one caught me a little bit by surprise, but it had the PSAR flip yesterday, and then today it held and then continued up, and when it broke above this and everything else was melting off, bought it, standard risk, and then it exploded all the way up here and started selling, cut it. I didn't wait for the dragon exit. This was basically 2 units off the top, and was able to cash about +3. Well, Greg, I would tell you, after a PSAR flip, and if that's your risk box, when is it too late? Well, when has it, what is your reward? What are you marking off in the trade frame? It's the second question on the standard list of questions to ask and to answer. What is a reasonable reward to aim for? If I was here, I would say there. That is a reasonable aiming point. So if it gets this far and I'm trying to decide, can I take that trade? I know what my reward is. What am I going to say I have to compare that to? Risk. What if I take this trade, if I take that entry, I then have to say, what's the hypothesis of the trade? The hypothesis is that after a reversal and a reversal of the dragon and a PSAR flip, that there is a reasonable possibility that it could get to the next resistance level. Okay? If that's my hypothesis, what is the price action that refutes the hypothesis? Well, I'd have to say at least the belly of the dragon or the belly of the PSAR. In this case, I would take the belly of the dragon because the dragon is already reversed. So if I declare that that is my incontrovertible evidence, that is the price that disproves the hypothesis, then that is my hypothesis risk, if you will. Then what's the next thing I'm going to ask you? Is there 2 units of reward available to the reasonable support or resistance level? If not, then you can't. Then that is too late to take the trade. Or you have to say, because I want to take this trade so badly, I'm going to have a smaller execution risk so that I can now say I have 2 execution risks to the upside. You're trying to talk yourself into taking a trade that does not objectively meet your requirements. Yeah, but Ken, what if that box right there, if this purple box, what if that's also the minimum manageable risk box? Well, then technically you do have a 2-to-1 on the MMRB. But remember, that entire black box is noise. Until price gets below this one, you don't have a signal that that trade is over. So if you elect to take that trade, it cannot be because you have a clear supportable hypothesis, but you have a desire to take that trade. So if you take the trade, you have to frame that so that you have a 2-to-1, and you must tell yourself, well, I have to be true. I have to get out at the execution risk at my MMRB. And I would just ask you, well, why do you have to take that trade? Why do you have to bend the rules in order, because you must have that trade? Why? Because you have a belief that it's going to work, and because you have fear of missing out. Rather than fiddle around with all of that and do that, you're trying to do that math while this thing is running away from you. That is never the time to frame the trade while it's running away from you. Far better for you to use that time to recognize that you're working on beliefs and fear of missing out and do something with it, and then be ready for the next trade. So when this thing happens, you can take the trade somewhere in here and not wait for it to get above that previous resistance and chase it all the way up. So, I mean, good question. And that's the answer. Get the trade framing questions. The trade framing questions, and then answer them for the specific trade. But more importantly, internalize those, and then realize that when you ask me that question, what you asked me was, another way of asking what you asked me was, how do I determine if that is a tradable frame? Well, I got to put my template on there, which has 2 units of reward to 1 unit of risk, and that my risk, the exit for that risk, is geared to the hypothesis of the trade. This is the price that proves I was wrong, or that the hypothesis didn't work. This entry was some kind of price action that signaled the entry into the possibility that that could be a move. And the upside was a not unreasonable profit target within the reasonable time frame available for this trade. So if I'm in a critical state here, then this thing should move right away before it does that. And if I can get my risk out, then I've successfully performed that experiment. So I really want you concentrating on the frame of mind and the point of view that is expressed in those trade framing questions. Because the specific question is, when is it too late to chase? As soon as you say, is it too late? Yes, it's too late. That's how you know. Or if you were trading with end of day data and swing trading 1 day at a time, and you had something like a 5-day down, and then you framed that trade this way, and you said, well, here's my price target. Yeah, but what if this thing gaps up? Can I take that trade? Well, you already know that this is the price here that invalidates that trade. So as this thing starts gapping up above yesterday's high, no matter where it gaps, this remains the profit target that's reasonable. So you can even break that range into 3, and you can say, look, if it gapped here, my risk box is now that big, and I know what my exit point is. So you can mathematically determine at the close what is the maximum size gap that you can tolerate and still retain a 2-to-1. Yeah, Mike asked me, would I say this is all part of preparing before trading? 100%. It is 100% preparation. 1,000 times yes. So you can determine the maximum price that you can professionally pay and still retain this as your risk box, using this as your price point. Now, it may be that if you're, that's using daily charts right there. If you were using hourly charts, you might find that you're able to find the hypothesis for trades that are earlier. For example, if the previous day's box looked like this, right? Then the mathematical entries using end-of-day data is an entry 5 cents above with a price 5 cents below. But if I'm trading on an hourly chart, I might be able to say, that is my measured support level. And so now, if my mechanical entry is here, I could reasonably argue that that is an acceptable level of risk, and that this would be the support level that if it breaks, I wouldn't wait to see it come down here to see if that breaks. I have enough information if that support level breaks that that hypothesis has failed, that it's not going up. Well, if that's the case, then the size of the execution risk box that I have to manage, I only need 2 of those instead of 2 of these. So time frame does matter, but let me tell you what, you better be framing those trades in the preparation phase before the markets open, because you know all that information ahead of time. That's what you see me doing with the 30-minute, where I'm identifying these little turning points in the RL10 as reasonable places to establish price levels, and then use that to frame trades. So, good question. Mexico. So this is one where, again, like I talked before about the natural turning points. And then this is supposed to go, it didn't, as it starts to break down. That's reason enough to get out. Like, could have shorted right there. Waited to the next day. Now, when you get that R10 wiggle and it breaks, that is the price signal that says there's evidence that it's doing this. The price that I needed to see to invalidate that hypothesis was, number 1, anchored to the top of the dragon. It also happens to be exactly equal to the R10. So when those things happen, that's sort of just a natural stop level. And now this one is a 2-hour battle drill. And then this one got as far as it needed to. I noticed the R10 stalling and start to reverse. And then it gets out at the dragon quite naturally. And then it closes here. So the next day it gaps down to here and starts failing immediately. It fails one risk box. So why not? And I know it's either going to work right away or it's going to fail right away, because it's at a price level where the buyers came in and crushed this thing north. So this is either going to gap down at the end of a harsh sell-off and start to revert, so I'm going to take an R loss, or this thing is likely to collapse huge, and it did. Now, this was one of the worst performers in my entire stack. The R10 barely got to the edge of the dragon, and by the time it did, it had already rolled over. So this is one of the few things that I'm holding overnight. And I'm holding it overnight because it failed below this level. It's already deep into the winter. That's why I'm willing to hold that one here. And compared to all the other ones that were failing, this one was in pretty bad shape. So this one is holding about, let's see, 5R after making 6R yesterday. But notice again how this thing, it works, resumes, and fails. So the upside pressure becomes failure and a turning point, and now you got all these lower highs, and now the orientation is clearly down, and it blew right through this price level. So there's more to follow on that one to the downside. How much further? A lot. It could get down to the 30-day low easily. It has another full $1 to fail from here down to. If that breaks, look out below. If it starts holding anywhere in here, then I'm out. I will have achieved the effect. So this is where the test is, the turning point. But that move right there over the last 5 days, because this is 5 days right here, that 5-day move erased 30 days of gains. What took, 25 days to get to here was erased in 5 days. Which is why I favor the collapsing dragon. Brazil, no trade for me today. There was one there. There's an interesting SSC setting up for tomorrow. Intel. So this is one that I did hold overnight from the night before. I was trying this one. It closed here. It gapped all the way down to there. Instantly exit. There was a revenge trade available, but I had plenty of other non-emotionally committed trades to work on. But that was definitely available, and it's finding support right where you would expect it to find support. If that fails, then it's coming to here. And then if the 10-day low fails, look out below. That would be a marker for the whole tech sector if that fails tomorrow. So keep an eye on that one. IP. Again, this was the trade I couldn't wait to get out of yesterday, just to clear my conscience. And then today, and while the rest of the market was failing, this thing started working, so I hold my nose, buy it, and take the dragon exit for +2. IYR, no trade. Regional banks, no trade. Mattel, no trade. McDonald's, boy, there was an intraday trade of beauty available here. But I would rather be on the indexes. Big fail. Right where it failed previously and failed all the way back down to where it failed before. If I'm holding this, if I'm short from anywhere in here, I'm exiting here because it's right on the cusp. And I think that would attract buying interest for people that want to own McDonald's on sale at $2.90 instead of at $300. Merck, same trade. Gap up and collapse was available. Microsoft, so this is one that we had from yesterday, the COTA 2. It closed here. It failed here. It failed just below the collapsing dragon. So I took the short. That was a stop and reverse. And took the dragon exit. That's kind of your revenge trade for +2. And -1, so net 1. No overnight risk. And I think that's because it's such a large part of a lot of different broad market indexes that the weakness of the rest of the market is temporarily depressing its price. But it's the AI winner, so I look at every sell-off in Microsoft as the beginning of a markdown sale to buy a really quality asset. This is marijuana, no trade. NVIDIA, huge gap down. This was 3 days of failure to follow through. Never did. There was one shot to the downside, then big gap down to here, harsh sell-off, recovered, started selling again. So on the second wave of intraday selling, I take the short, standard risk, harsh sell-off, 1, 2, 3 exit at the edge of the dragon for +2, no overnight risk. I like that it was stabilizing here, so that along with Intel and Microsoft will be the first things that I'm looking at to determine if today was a one-day weakness. Clean energy, huge. Imagine my sadness if I hadn't. If this thing was supposed to work as the second position from here, and it didn't, so we just got out, and then it did nothing. Imagine my sadness if I had held it and said, well, it hadn't failed further, and then ate that. That would have been turning a really nice trade into a losing trade. So big gap down to here, starting to sell off, risk, dragon exit, +2. That's all I'm looking for on a day like today, is to pick up the loose change that's fallen out of people's money as they run away in fear from the market. Rivian, no trade, although it was there in both directions. Again, you can see the magnitude of the S&P move, closing at a new 10-day low. Now, the reason I don't have that many holding overnight is that this is a natural support level. If that fails, then we have a minor support here. And then this is your next really strong support. And then here's the 30-day low. So you have a price ladder of standard units that we can use to start estimating. So you asked me about when can you do that prep work? I'm doing it right now. So if it gaps down and starts failing, how far is too far? Well, if I'm going to use that as a standard unit of risk, which is about a daily risk box, I have a reasonable expectation it could get to here. So it could gap this far, and I could still have 1, 2, 3 units of risk. It could gap this far and start failing, and I'll be on it. Treasuries just completely missed the entire play. Tesla. This is one of the few that I'm going to hold overnight. So here was the gap down. Collapse through the collapsing dragon. Notice when that happens, it's another leg down. So leg 1 to the test, leg 2 to here, and then all the way back. I decided to take that and buy Tesla on sale at $255 with a $4 risk, with an expectation that it could get to 268, which is +13, which is 3-1. And if that works, then reasonable chance for it to get to the 10-day high at 294 and the 30-day high at 300. So it's on a $50 sale from just 10 days ago. $50 off of 300. That's a minus 15%. That's Tesla on sale. Thinks everybody who has a more than a 1 week time horizon. Lastly, U.S. Steel. This is one I'm holding overnight because there's no high-tech pool of buyers ready to jump in on this thing. The gap down to here, standard risk, 1, 2, 3, 4, plus 4, and it closed weekly. And if this fails, it's coming down to here right away. Sniper trades of the day. You should listen to the short video that it's on the YouTube channel. Is already there. Where my sniper trade was it this one? Oh, here we go. Yeah, so this was the sniper trade of the day, intraday. This is Brazil. Oh, I'm sorry, Mexico. So there was the close. That's what a noise box looks like. That's the same size as the standard statistical box. So when I see a sideways chop like this, that's just the bots trading back and forth. That is no signal whatsoever. And then it gapped down this far and started selling off inside the 3-minute bar. I just took it because of how weak the market was everywhere. Collapses. Second position. Third position. This is noise. Now the R10 reverses and gets to the PSAR, so I'm out net plus 5. Yeah, one of the things the doc said was that, the valve was so severely restricted that my heart's been working really hard just to get the blood through, and that when they replace that, the increase in throughput of blood, I'm going to end up feeling a lot better because my heart's used to working harder. That's part of the reason it's in great shape, except for that one valve. It's like doing resistance training against myself. Now, that's not the reason why I did it, but that's a feature, not a bug. All right, so here's Damien. Gets an OR3 short, standard box, dragon exit for 0.75. The next PSAR flip, just being prepared. It had this much time to continue, and it never did. You start getting lower highs, and then the PSAR breaks, standard risk, cashes, re-enters, cashes, 2.4. Correct. Notice that when it did breach after a really harsh winter and then a grinding spring, all it was doing in here was not failing further. And then when it finally breached for air like a whale, it immediately started getting back in the winter, and that tells you, oh, it might be another one of these. And that happened pretty fast, so it didn't get very deep. And then when it starts reversing, that's a great time to exit, because you can see the divergence now. And then notice once again, it spent even less time up here in the summer and spring. And that tells you this is a great short opportunity. Oh yeah. So pay attention to your MACD. Red doing some grinding. I like the quick cut. We could have reversed right away and then taken a dragon exit. I like the short. I like the cut. Good patience, tight risk. Takes the gift. It went beyond the Z3, and as it starts coming back, he says, let me just get paid. Now notice right here. There's your re-entry. And then you should be able to get this. And then that would give you a fractional win instead of a full 1R loss. Great stop and reverse. Okay, I know you want to get paid to pay for that one, but when it fails, there's a re-entry. And then you get a better performance on this trade. Yep, how to pick the worst time of the day. If only there was a way to determine that we're in the compression. Oh yeah, there is. That's the SSA. So I don't mind taking that. At least you didn't stop and reverse. I would take that every day, and that's a great exit. And then something you can do is go to the point of maximum pinch. This is a fake one go to. So you can technically get short here, or you can get short here, because this is supposed to go, but it doesn't. And now you're playing the reversal back across the channel. You don't expect that to collapse, but if it does, you know it'll be big. And what you're trying to do is at least capture that initial piece. And then if you get this entry, you don't take a second entry here. You might wait till here for a 2-hour battle drill. And then you probably take this exit at the edge of the dragon, or you wait for it to reverse and then take the exit here. What I'm noticing here is just that, while we're trading this one and monkeying around here, I just wonder, where are we? And where are we? I don't mind this short at all. There's nothing wrong. Bad idea based on piece. No, I think that's all right. That's a good exit. But then this is the re-entry short with your risk box is still there. And you never get close to taking a loss. And you get a chance either here or here to get a second position. On this short, when this comes back out of the dragon, you can get short there. You can get short right about here. If you're long on the PSAR flip down here, there's the second position. And then your exit would be the edge of the dragon on that trade. The Kiwi, there just wasn't much movement in here. This is all pretty tight inside the chop. Now, remember what I was coaching you before. I said, if that's your execution stop, you could set that equal to 0.6 position sizing risk, and then that is a sliver of a loss. Instead of being a full 0.6, remember, try setting that whole thing equal to 0.6 and see what that does to your peace of mind. And then when you see this thing roll over, somewhere in here or here, there's some short trades available, especially on a day like today. Although, again, this is currency, so it's not geared to the U.S. as much. Let's see. Let me make this a little larger. Collapsing dragon, wrist box. I'd like to try to scratch that somehow that, okay, so minus 0.2, that's fine. Great re-entry, drag and exit, that's good. I like the long side, quick cut. I like the long side here. Or no, this was short, okay. I like that short and quick cut, stayed out of the chop mostly. This doesn't cost you much, that doesn't cost you much. Yeah, I don't disagree. Yeah, those two cost you 0.7. Like this is about where I become interested in it here, because now you can see that you've got a Kata 2 setting up, and you could set a really tight risk box. That's where I could be interested. But that's probably already close to the end of the day. Yeah, so half your loss on that could have been avoided. Great entry. I like all of those. There's with the exception of that last one. I think that's one. There was nothing about today that made you think that this was like this was a temporary one symbol temporarily getting smacked down. The whole market got punched in the face today. And so it's not all going to come rushing back like they're all NASDAQ stocks. So on the short side, grab what you can and just take that. Don't try to get too much out of it. Everything is in the chop. You're starting to drift back into that habit where you're taking large losses on trades inside the dragon. You're taking very large losses in between the PSAR dots. So we got to change that mindset. Better. You get paid on a piece. You get paid on a piece. This is a reasonable effort. This should be an instant stop and reverse, which it was, I think. Yeah. So you got paid. Got paid. Yeah, got paid. Nice. Quick scratch. Scratch. Trying too hard. This was really good patience. When the R10 breaks through the dragon, taking that exit's fine. Got paid, got paid. Not bad. Again, sticking around too long, trying to make things happen. As the day is running out of time, you're trying to make counter trend trades. So don't do that. Short from here and gets paid. Was not able to trade until here. Gets paid, gets paid, gets paid. Taking little bites at the buffet. You can live on that. You don't got to get the whole whale. So, Lou, you sent me a question about how long should you give trades to see if they're working. A lot that has to do with the frame of the trade and the hypothesis of the trade. So if I'm trading the 5DD swing pattern, the hypothesis of that trade in the rules says I can expect a 5 to 8% move in the next 3 to 5 days. So that means if I'm trading on daily bars, and I set this one up as my frame, and if that's my risk, then I can expect in the next 1, 2, 3, 4, 5 days that it should make that observably good move to reverse that one. So that in this case, the pattern itself, the hypothesis itself, includes a time dimension in it. If I'm trading intraday and I'm waiting for the lunch period to be over and I don't want to trade in the last 30 minutes, then I've given myself 4 hours, 4 30-minute segments, 2 hours, in which, say, price is here at maybe a low of the day, and I'm playing this way, it has about 3 or 4 bars to get moving. And if we are trading compound critical states like that, a compound critical state, the definition of that is it has compressed to such a level that we are entitled to not be surprised if we have a large move in a shorter than normal period of time. So typically, that's 3 to 5 bars on whatever time frame you witnessed a compound critical state. It's supposed to go. And if it doesn't go, failure to follow through is information. So that's what I would say. As a rule of thumb, 3 to 5 bars, because we've got large moves that are terminating in dojis, which give us these tight boxes, and we're playing for the coiled spring breakouts. So it should happen right like a jack in a box. It's supposed to go right away. Or if the herd is down for the night next to the pond, it's really quiet, and the herd is resting quietly next to this little pond at night, and all the herd is, and then some guy comes along and throws some kind of giant rock into the pool, we expect that that's going to trigger a stampede right away. If it doesn't stampede right away, then obviously that rock wasn't big enough to startle them. Compound critical states are where we have a small risk compared to large potential gains, and it's supposed to happen sooner rather than later. So I would just coach you towards 3 to 5 bars in general. I'll probably say that again tomorrow night, but I noticed you were in here today. All right, guys, that's everything I got for today. I will get the reports printed and distributed. So next week's reports are going to be a reduced set of the daily. I'm not going to have a lot of the extra background information. I'm not convinced that helps you that much anyway. Again, the Ableway Tech has everything that I am producing for the daily report. You can get in the Thinkorswim platform from Ableway. And you can get it for the TC2000 in the TC2000 bundle. And I'm willing to put that on sale for $3,000 instead of $5,000, just as a way to take advantage of the moment. So if you're interested in the TC2000 bundle on sale, send me a note. I'll hook you up with Danny. We'll get that going. It's my intention that your goal should be to be information independent of me in terms of generating signals. You want to be a self-contained scout, framer, trader, and fireman on your own. So the sooner you can be using my reports and styles to quickly find which ones are well suited for you. But once you start getting your arms around that, you need to be finding ways to find your targets and frame your targets in an independent manner. And you will see that all of the successful guys are doing that. Maybe this is the wake-up call. You can afford, from my own health experience, I will just tell you, sometimes you get a wake-up. When you get a wake-up call, don't hit the snooze button. Get into action with gratitude and forgiveness, okay? So that's everything we got. Take good care, and we'll see you tomorrow.